New YouTube video, a major market update on Bitcoin. We're going to talk about Ethereum, and we're also going to talk about XRP in this update. My last video was on XRP. I was talking about how it's prepping for a major move to the upside, so I'm going to talk about that. We're also going to talk about Bitcoin and what I think is going to happen over the coming weeks, and we're also going to touch on Ethereum as well. It's been a very, very interesting last few weeks. We've essentially been following this path that I posted on my Twitter some time ago. The bottom line, this is what I've been maintaining for months now, is that I am macro bullish, I'm high time frame bullish, as long as this weekly level here is held on a weekly closing basis, and I expect it to hold. So even when we were up here, I mentioned in my last update on Bitcoin on YouTube that even a drop down to this region is just a major buy the dip opportunity, and there's nothing to be afraid of unless this region is lost, which again I mentioned I don't expect that to happen. So I was looking for a drop down to this region and then continuation to the upside. In my last YouTube video I talked about different scenarios in which we may not reach 10.5k on this drop and continue up, or scenarios in which 10.5k may have been reached. Was not actually expecting 10.5k to be reached yet, but it ended up getting hit on this major drop to the downside. But again, like I mentioned, this level held, and as long as it holds, there's nothing really to be concerned about. This is just a major high time frame support resistance flip and retest, and again, a major buy the dip opportunity. Since that video, guys, I posted this on my Twitter a couple of weeks ago, and I said macro bullish as long as 9.6k, the lower bounds of this level, holds on the weekly, resistance / potential rejection at mid to high 11ks, which is this red region here, and a potential for a wick below 9.8k, below these lows, just a wick, into weekly demand, which is this level right here, as a final dip before continuation to the upside. I shared this when we were right about here at around 10.3k, I believe, on my Twitter. Since then, we have now pushed up to my area of resistance and an area of potential rejection, which is the mid to high 11ks. We've seen a little bit of a rejection from there. We'll dive into this here in a second. And up until very recently, I was looking for one more major leg to the downside, to the low 9Ks, before we actually make the move up and break these highs here at 12.5K. Now, once these highs are broken at 12.5K, guys, the next major move is a move to 14,000. This is the move that I've been talking about for a while now. Ever since we had our lows here, I mentioned that the next main target is 14K. We finally flipped this major area of resistance that we were battling for a very long time. Now we've retested it as support, and again, the next major target is going to be 14K plus. The question is, do we get a final dip down to the low 9Ks before heading up, or do we just continue up from here? And that has been the topic of what I've been discussing on Twitter over the last couple of weeks. Let's dive right into it, guys. We're going to start off with Bitcoin. We'll work our way to Ethereum and XRP shortly after. This is the high time frame. We have tapped the area of supply, potential rejection region. We now, just based on PA alone, typically look for a move back down to this area here. This is the next area of major demand. We have untapped lows going all the way up here. Logically, after a major drop like this and a bearish retest, we'd expect another push to the downside. Let's go down to the daily time frame and see what we have. All right, guys, so this is the daily time frame on Bitcoin, and let's take a look at what we got here. You guys will recall, again, if you follow me on Twitter, that at 10.4 to 10.5K, right when we were sitting here, I mentioned my bias is bullish. This is just a retest. As long as we hold this level, the number goes up. I'd outlined two targets, target 1, which is above these local highs here at 11.2K, and target 2, which is our area of supply, which again is that same time frame, that same level on the high time frame, this red region right here. This is the lower time frame version of it. This was my target 2. This level was held. We pushed to the upside. We tapped my target 1. We tapped my target 2. And this is where I said, be cautious as bulls. It was great to be bullish here and loading up longs here. Now that we're up against high time frame supply, again, not only on the daily, but on the weekly as well, it's time to be a little bit more cautious with our entries and not simply rush into longs at this particular region. Now, here was the rationale. Okay, so we already know the rationale for another drop to the downside is that we have major supply here that we're retesting for the first time after a massive drop. That indicates that sellers will typically step in here to sell the retest, which is why we would look for a retest of this level from a PA perspective. We also have all these lows that have not been swept. A low here, a low here, a low here. And typically you have a lot of people that have placed their stop losses here, have been moving their stop losses up on their longs as we've been making these swing lows. And so the argument here would be that price will be manipulated back down below these lows by larger players to take all those stop losses in order to help fill their larger positions. If I was a massive player and I wanted to fill a bag of a million Bitcoin. Again, this is just a very example. Don't take the numbers seriously, but I'm found to fill a bag of a million Bitcoin. If I were to buy a million Bitcoin right here, it'd cause price to shoot up. And I'm not ready for price to shoot up. I need to buy my Bitcoin. The order books are too thin. So I can't just market buy a million Bitcoin or price is going to run away without me on board. What I need to do is I need to force price below these levels, hit these swing lows where people's stop losses are. If I push price below this and someone else's stop loss gets triggered, they automatically market sell, right? They sell their long position because their stop loss got hit. And that creates liquidity on the books for me to buy up their Bitcoin that they're selling. And that allows me to fill my bags. So as a larger player, you would then expect, okay, manipulation down to clear all these lows, clear all the stops here, load up one last time in this low 9K level. Again, on the high time frame, it's just a weekly retest of this region here, which is still bullish, and then send us up. That's the argument for another leg down from a PA perspective. However, something that I noticed just yesterday, which has me making this video right now, I always question my bias, and I always say, okay, if I'm wrong and we do just head up here, is there an argument for that? Is there a logical argument or explanation for us just continuing up rather than making the move down? And you guys know that I use Elliott wave to determine directional bias on the high time frame using wave structure and stuff like that. And the thing that I was struggling with this entire time with the wave count was that it looked incomplete. The move down looked incomplete because what I had here was a 3-wave corrective structure. Then I had a 3-wave corrective structure. Then I had a 3-wave corrective structure, another 3-wave corrective structure, and I'm looking for another 3-wave corrective structure, okay? What I got here was a very clear first wave. That's a 5-wave impulse move, okay? 1, 2, 3, 4, 5. Then you look for a corrective wave. Then you look for another 1, 2, 3, 4, 5 to complete a final 3-legged move, okay? So this is what I've been looking for, and we haven't got it yet. And this is still potentially valid as long as these highs aren't cleared. It's just that it would look something like this. 1, 2, 3, okay? And that actually lines up pretty well with our target here in green. If we take a 1-to-1 extension or measurement of this leg down, and we match it from our local high, it puts us pretty close to green. So that's a logical thing that I've been looking for, right? It matches up with us being a high time frame supply. It matches up with all these unstepped lows being taken right into our area of demand to complete a 3-wave structure. It all added up. At the same time, I need to find a bullish argument for this because I don't want to get stuck with just one bias. I need to see what are all the possibilities. Is there a way in which this correction actually completed at these lows? Is that possible? Can I make a logical count that arrives with this being the bottom of the correction and we just head up from here? And this is what had been tricking me this whole time. Very tricky, and I just noticed this yesterday, and I think this puts all the pieces of the puzzle together. But up until yesterday, I was thinking there's no way. There's no way this correction is done because there's only one leg down here. Some are counting this move. Some are counting this as the ABC. So they're saying this was the first leg down, this was our second leg, this was our third leg. The problem that I have with this is that on the lower time frames, okay, on the lower time frames, I can see over here, okay, this is a 1, 2, this is a clear impulse right here, okay? So this is an impulse. And then I can see a corrective structure, and then this is an impulse, right? 1, 2, 3, 4, 5. These are both impulses, right? Both of these right here, which means that this can't just be an A, B, C. This is a 3-legged structure. This is an A, B, C. That's 3 legs, right? This is 5 legs. There's no such thing as a 3, 3, 5. There's a flat correction, which is a 3, 3, 5, but this does not look like a flat. This is more like a zigzag shape. So if this is a 3-legged structure and this is a corrective structure, I need a 3-legged structure here. I can't just have one impulse down and then a reversal. It doesn't make sense. If you guys are familiar with the rules of Elliott wave, it doesn't make any sense. You can't have that. So I was struggling to find a way in which this could be complete because I only have one leg down here. I don't have 3. How can this be complete? And the other thing that's important is this structure right here. And this is the piece of the puzzle. And this was tricky, but I think I figured it out, guys. This is the piece of the puzzle that was missing. We had an impulse here, a 5-legged move. 1, 2. Even the first subwave is very clearly 5 legs. 1, 2, 3, 4, 5. Corrective structure. That's our 3rd leg. That's our 4th leg. That's our 5th leg. Very clean impulse here, and I was struggling to find out how it fit along with this corrective move up. I was assuming that this was the bottom of our first wave, and we were making a corrective wave up, a B wave or an X wave, and then we're going to get another leg down. And so I was thinking, okay, maybe this is like a ABC. That's what I came up with, right? So this is a corrective leg, 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 and then we impulse back down to match this move here. That was my rationale. And obviously I mentioned that this being an ABC looks very odd because our typical flats, this is fine for a flat, but our C wave typically would extend past this low, but not this drastically. That's a really long C wave. It doesn't look proportional to the A and the B here. But with this being an impulse that eventually got reclaimed, again, like I said, you can't just have a 5-wave move down. It has to be a 3-legged structure. This couldn't have just been a 5-legged move down. It has to be part of some 3-legged structure. The only 3-legged structure I was seeing was this ABC. That's the only thing I could come up with. Well, guys, the mystery, I think, has been solved. And it's going to seem kind of crazy, but it makes sense every way that I look at it now. And I now think that this impulse right here was actually the 3rd wave of this A, B, C, and it truncated. It failed to clear these lows. It truncated. This was a truncated corrective structure, an ABC that occurred. Let's take a closer look. Here it is, guys. Here's another chart that shows you exactly what I'm talking about. And the reason why this looked so difficult to count off these lows, the reason why this impulse seemed to be out of place, the reason why this was so difficult to assume as a completed correction was because of this truncation. Now, truncations are rare. They do not occur very often. I posted a chart earlier on Ethereum but talking about a similar truncation. I said it's highly unlikely. This A wave is pretty long. This C wave is really short. A truncation doesn't normally seem like something that would happen, and typically I would discount this and throw it out the window. But this is the key that I noticed yesterday, and this kind of ties it all together. Remember, truncations happen when markets are extremely bullish. So truncations to the low, when a corrective wave or a 5th wave fails to clear the prior low, that occurs when the markets are very bullish and prices being pushed to the upside, and there's not enough sell pressure to actually complete the correction. That is when truncations occur, okay? Now here's Bitcoin's wave structure. And so just to be clear, what we have here is a WXY, 3-legged structure, XY. So this is a this is going to be a WXY, okay? Which should have cleared these lows after this A, B, C, but it truncated, okay? And that explains this 3-legged move down, that explains this corrective move up, and then we started impulsing here, okay? This is Bitcoin. Take a look at Ethereum next. Okay, this is Ethereum, same wave structure. We had an impulse off these highs. We wanted to see another leg down. We got an impulse, truncated again. Okay, this one truncated less than Bitcoin. Bitcoin truncated way up here. Ethereum barely truncated, barely missed my swing low target, okay? But then we pushed up again, and if you can see on this wick, we cleared these highs. That means that this structure completed, okay? This, we were looking for a 1, 2, 3, 4, 5 down. Something like this. You guys should have seen that chart on Twitter that I've posted. But once we got, what the heck was that? Once we got this impulse down, I was looking for a move up and then a 3, 4, 5 to complete this impulse to match this one. Instead, we truncated here and we ended up grinding up and clearing these highs, which invalidates a potential impulse here. That means this move completed. Again, it could be, the argument could have been, and it was, that this was just a very ugly ABC. Okay? That this was the argument. This was an ugly corrective structure. So we have a corrective structure, corrective structure, corrective structure, corrective structure, and then we're going to come down for an impulse again to match this guy. Now I'm making the argument that this was actually an impulse, and it was the C wave of this ABC truncated. And here's why I think this, guys, and this kind of puts it all together. Let's take a look at XRP now. Boom, guys. XRP, unlike Bitcoin, unlike Ethereum, has that same impulsive wave in the middle of this structure, yet this one actually cleared the lows and completed the final corrective structure here on XRP, okay? What this tells me, guys, is that what we probably have been seeing is a truncated completion of this correction on Bitcoin because it is the most bullish right now of the majors. Bitcoin Dominance supports this. Another truncated move on Ethereum, a little bit stronger, a little bit weaker than Bitcoin, stronger than XRP as we've seen up until now. And finally, XRP was the only major that actually completed the correction and did not truncate. But what we have here is the same wave structure across all of our majors. A final ABC corrective structure to the downside to complete our corrections and then continue up. And you can see that the moves that followed, even on Bitcoin, you can see these aggressive moves to the downside. This was about maybe like a 618 retracement, This thus far has been a 30-40% retracement. Ethereum has deeper retracements. This was a deeper retracement. This was a deeper retracement, less acceleration to the upside. And XRP has the deepest retracements and the least acceleration to the upside. So we can see that the weakest, XRP up until now, fell the hardest and is having a little bit of a harder time to climb back up. Ethereum is faring a little bit better, truncated just a little bit, but is making its way back up. And Bitcoin's performing the best, truncated by a lot, and is making its way back up in a more aggressive manner than the other majors. You'll also notice, guys, here on the daily time frame, okay? Let me go ahead and mark off that weekly level one more time. I'm going to go ahead and mark off that weekly level, the very important high time frame support resistance retest, okay? And you'll see that on the daily time frame, we had massive absorption right here, buyers stepping in and buying everything they could here. And that explains the truncation that we got here. There simply wasn't enough sell pressure left because it was being absorbed by all the buyers in this region. So price couldn't make its way back down here. It couldn't make another lower low. And therefore, the impulse actually ended earlier than we would have expected and truncated, throwing me, and I'm sure many others, off as we were looking, and we have been looking for a completion of this three-legged structure. However, it's very possible that this three-legged structure already completed, and the truncation is what threw us all off this entire time. And the reason I say this is because counting off of these lows, this entire move up looks very corrective. It doesn't look impulsive. That's another argument that I had for the low not being in. We typically expect a correction to finish and then an impulse off the lows. However, if we consider that the correction ended here and not at these lows, now we can see impulsive moves off the low, right? So this was maybe our first impulse, okay? This was the corrective wave 3. Then we got another impulse to the upside, 1, 2, 3, 4, 5. So what it looks to me like we're doing here is we're forming a series of 1, 2, 1, 2s. And again, what a 1, 2, 1, 2 is it just implies that the first major impulse has started. This was our first subwave of the first impulse. We got a corrective wave 2. We're working on our third wave, fourth wave, fifth wave. Within this larger third wave, we're forming another set of 1, 2s. Or sorry, this would be as such. So 1, 2, 3, 4, 5, something like this. Okay, so this is actually a move of a smaller degree. I'm going to make this a smaller degree. I'm going to change the color to green. Okay, and so what we're seeing here is a wave 1, a wave 2, and then a subwave 1 and a subwave 2. Okay, before we start impulsing to the upside. And this gives us that choppy corrective looking structure. It fits us in a channel, which is another argument for us still being in a corrective move, because it channels so nicely, and typically corrective structures channel very nicely. So this again makes us think that we're actually in a corrective structure and we're going to get a big breakdown here, right? But again, from a wave structure perspective, this makes a lot more sense, a truncated move. We started impulsing here. We're getting 1, 2, 1, 2s. Now, the confirmation that we get that this is actually bullish is that if this really is a 1, 2, 1, 2, we're going to end up doing something like this. We are going to end up breaking this, okay, to the upside. We're going to break through this channel, okay, and we're going to impulse out the top. And that's when we know, we get confirmation that this was not a corrective structure because we broke the channel. Corrective structures tend to channel very well. As long as we channel, we assume corrective structure if we're only going off of that information. When this channel breaks, gets broken to the upside impulsively, then we think, okay, this is probably not a corrective structure. But after doing this analysis, I'm getting a little bit of a head start here and thinking that this is probably not a corrective structure. We're probably going to rip through this channel through the top of it pretty soon, okay? Now, let's talk about, even on Ethereum, we have the same type of deal, potential impulse corrective wave, another potential impulse corrective wave. And finally, in XRP, same situation, okay? We have an impulse, corrective wave, impulse, corrective wave, 1, 2, 1, 2, okay? This idea that we have here, these 1, 2, 1, 2s, gets invalidated if we lose this level here, the swing low on XRP at around 0.23. It gets invalidated if we lose this swing low here on Ethereum at 333. And it gets invalidated if we lose this swing low here on Bitcoin here at 10.3K, 10.4K, okay? Or you can even say 10.5K. So these are the invalidation levels, okay, that we're looking at. So where do we go from here? How do we approach this, okay? If we are making 1, 2, 1, 2s, then we're going to see an explosive move to the upside. But at the same time, if we're against high time frame supply, how does one approach this, keeping risk reward in perspective and making sure that they're not longing into resistance? Because we are up against high time frame resistance. Let's not forget where we are. We are up against major resistance. So it's not ideal to just jump into a long here without a plan. We have to have a plan. So how does one approach this when wave structure, when other things are telling them we're probably going to break to the upside, or it seems quite likely, yet we're up against a major resistance region? What's the right way to approach a situation like this? Let's take a look, guys. Okay, guys, so this is my approach to this. This is my plan. We know that bullish invalidation of this 1, 2, 1, 2 occurs on a loss of this level here at 10.5K. This is my invalidation point. We would assume if we are going to move up and we're going to impulse and break through this area of supply, that we're going to maintain this channel. Okay, that's logical assumption to make. And we know that we can't long over here because we have resistance. So we only have two options here, okay? I've marked off a key level here on the daily. This is a key area right here, key area of demand. We broke down from it. We then retested it as resistance, and we've now gotten back above it. This area should act as support if we are bullish here. If we are bullish, and we had a truncated wave that ended here, okay? This was our truncation. That means bulls are going to be stepping in to buy the dips aggressively whenever the opportunity presents itself. This is the most obvious area at which to buy the dip. And so that's a level that I'm looking at and I'm interested in entering, okay? Here's truncation. Now, when, again, as I mentioned earlier, when we get truncated moves like this, an ABC that truncated, it indicates the market's very bullish. We don't expect to go back down below these lows after truncation. We expect to simply continue up. We know our bullish invalidation is here. We know we have a clear area of demand, likely to act as an area of support here on the daily chart right here. We know that we are also up against high time frame supply. Even on the 3-day, if I were to go to the 3-day chart, you can mark off this as an area of supply, which we are literally right inside right now. So you have to be cautious on how you approach this. You need to set a stop loss if you're going to enter this position, because if I'm wrong and we don't rip through the upside, we're going to make a major move to the downside, right? We're going to target this region if I'm wrong about this. So you need to have a stop loss in place. You need to have a target to the upside. You need to have a positive entry, and all those things need to make sense from a risk to reward perspective for you to enter a trade here. You can't just rush in here and go long because of an assumption or because of what we think we're seeing here. So these are my options, guys. A long entry here at 11K on a retest of this key area of demand. A stop loss below the bullish invalidation point here at 10.5K. A target, again, if we get past this, we're ripping up to 14K. A target of 14K, okay? This is what I'm looking at here, okay? Your alternate option, if you want to play this safe, again, if we're going to reject, it's going to be around 12K. We're not going to be able to get past this if we're going to head down to this region here at 9.2K. We're going to reject before we can get through this area of supply. So your safer option, if you don't want to risk taking along at 11K and getting potentially stopped out, your safer, more conservative approach is waiting for this level here, this area of daily supply, to be reclaimed. What that means is we need to see a daily close above this level, and then you want to long on a retest of 12K from above. Okay, this would ensure that you're not longing into resistance, you're longing above resistance. You're longing a support and resistance flip, similar to the high time frame support and resistance flip that you would have been longing had you longed the low 9Ks. We didn't long here, we didn't long here, we longed once we got above and retested it from above, and then you would have had a very nice move to the upside about 10-15%. In the same way, we're going to approach this in the same way, okay? Wait for a entry that's close to our invalidation right here, a logical entry that's close to invalidation, okay? So you have a limited risk. Or wait for a reclaim of this area of supply, which is our major resistance. If we can get above this, we're probably going to rip right through, and then we're headed to 14K. So this is how I would approach this. So here's the bottom line, guys. Here is the bottom line for this video. We are against an area of supply. Macro is high time bullish above weekly support. In the lower time frames, we have an area of supply here, which is bearish resistance. Confirmation of the bull trend will be on a break above 12K, which will likely lead us to continuation of 14K plus. You have an aggressive option. If you think like me, I'm pretty fairly convinced now, I have to say this, my bias is now that we see 14K before we see 9Ks again, okay? That gets invalidated if we lose 10.5K, but I'm full bull right now unless 10.5K is lost. So my approach for someone like me who wants to get in more aggressively is to look to long this level here, stop loss here, and then ride the entire thing up. Your approach, alternatively, if you want to go conservative, again, long this level and then go up. So I'm very bullish here, but we cannot ignore the fact that we're up against high time frame supply. So approach this in a methodical manner. Don't just jump in because you agree with what I see here. You have to take a logical approach to this. We are up against resistance. That's the bottom line, okay? So approach this watching, but this is what I would do, guys. And then again, XRP and Ethereum, I said I'd talk about those. Essentially, they're following the same structure here, which means that if I'm correct, okay, if I'm correct about this thesis, which I'm fairly convinced at this point because of the impulsivity of these moves to the upside and the nice wave structure that we got here, okay, then we're likely to continue up, and this was likely the low here at 21.9 cents. Remember, guys, if you guys, let's see here if I can find it, if I can find my other chart from my last XRP video. All right, guys, so here's actually I believe this is the chart from my last XRP video update. And in my last video, I said XRP is prepping for a massive run. I said that, I think it was like, I can't remember what level it was. There was an intermediate level here, I want to say 24, 25 cents, where I said it's likely that level is held. If that level is lost, then we risk visiting the 23-cent region. I didn't think it was going to happen at that time, but I said it's possible, and that as long as this level is held, nothing has really changed. And over the last couple of weeks, have been people saying, hey, what happened in your video? XRP hasn't had a massive run. What happened? Like, you were wrong, right? Guys, XRP can't run when the whole entire market is correcting, okay? What hasn't changed is that we did tap this area at 23, 24 cents, which I said was very possible in my last video. It's just taking longer to ramp up, okay? But this hasn't changed the bullish thesis in XRP at all. We still have an impulse off these lows. We're still correcting it, and we're still going to get another impulse to the upside, in my opinion, which is going to be a very explosive move. So from my last XRP video, nothing has changed. It's just taking longer because the entire market is undergoing a major correction. And again, based on today's video, you guys now know that I am expecting for XRP continuation up, okay, as long as this low here at 0.229 is not lost. If it's not, this is likely a 1-2-1-2, and we're likely to get a continuation to the upside along with the rest of the market. So you now know my key levels of invalidation for XRP. And on the high time frame, essentially what we're building up to here, and I posted a chart about this on Twitter as well, is we are building up what I believe to be a move like this. Push up here, come back down, and then go up, okay? Or you can say push up here, come back down, and then go up. Essentially one of those inverse head and shoulders. I don't trade off of these, but that's essentially what it's going to look like here. There's a key area of supply here in XRP, which I've marked off on some of my other charts. Okay, so some of you guys may have seen this chart of XRP on my Twitter. Again, I've had two upside targets, target 1 and target 2. I did attempt a long here on XRP at this level here, got stopped out right over here because I was thinking this was a completed wave 2. Wave 2 looks to have extended a little bit. That's fine as long as we don't clear these lows here. The bullish thesis is still valid as a 1-2-1-2, as I've talked about in this video. But again, what I'm expecting here, and I posted this chart on Twitter, is a push from here back above. Okay, this area right here is another major supply zone similar to the one that we're up against here on Bitcoin right now. And so we'd expect resistance over here. So then a retracement, okay, a retracement back to here to retest this area as support, and then a launch to the upside here and a breakthrough. And you can see that this would essentially form a very nice base and a very nice rounded base after this very strong impulse. And that would allow us to continue to impulse to the upside from here. And then, of course, XRP is going to go wild and everyone's going to start loving it again. But this is essentially what I'm expecting at this point in time right now, guys. The bottom line is, for now, the key levels on XRP that you guys need to be mindful of, okay? This level right here, which is going to be the major area of resistance. Getting above this is equivalent to getting above 12K on Bitcoin, okay? If we get a high time frame close above here, the bottom likely is in, just as if we get a high time close on Bitcoin over 12K, the bottom is likely in on Bitcoin. In the same way, this is the key level that we need to get above on XRP to get confirmation that the bottom is in. On the downside, the key level that you need to watch out for, losing this level is bad because it makes this a 3-wave structure instead of a 5-wave or a 1-2-1-2. So this is the bullish invalidation here at 0.229, okay? If this level is lost, we go down here, which I don't think is going to happen anymore. But if this level is lost, then we end up targeting this region right here, okay? As long as this low is held, I expect we continue up to 28 to 29 cents. I expect some sort of a rejection, correction from there, maybe a retrace to 0.265, retest this area support before we blast through to the upside. By this time, Bitcoin should be well above 12K by the time we get here, so we'll already have our answer for the most part. But this is what I'll be watching for here on XRP as well over the coming days and weeks. And for Ethereum, guys, let me touch on Ethereum real quick since I said I'd talk about that as well. Same situation right now. This was my expectation up until yesterday, that we were coming up, we were going to reject here, complete a 3-wave structure, and then we're going to break down from here. And again, the only way that I could rationalize that with this impulse that we saw that truncated right here was I had to assume that this impulse here was actually the C leg of a ABC flat, okay? And that allowed us to continue up from here and clear these highs like we did, without this just being a 5-wave move down. It was actually the C wave, and that would allow us to continue up. Again, now I think that this was just a truncated ABC. Our correction actually ended here. We won't be clearing 311 anymore. We'll actually be going up, in my opinion, to clear these highs here at 490 plus before we ever see, sub 300 again at this point. That idea, once again, just like the invalidation points on Bitcoin, on Ethereum, on XRP, is a loss of this level here at 333. If 333 is lost, we likely head back down to 260 to 270. If 333 is held, then we likely continue up to the highs here at 490 after ultimately clearing this region. Now, keep in mind, just like Bitcoin and XRP, Ethereum is up against major resistance here as well, major supply, right? We have, I think this is a 3-day level. Yep, it's a 3-day level. We have a 3-day level here, okay? Major resistance, supply, not advisable to long ride into this region. Just to be frank, we need to have a better plan than that. We have another major area of supply up here. So even if we manage to get past this region, this is going to act as a major area of supply because it's what led to this breakdown, right? So 420, 430 is going to be another major area of resistance. So the plan here, just like the plan would be on Bitcoin and XRP, is to wait for a dip and enter as close to invalidation as you can, so you can enter, set a stop loss, and then target those highs. Or wait till we get above here. But if we get above here, then we're headed to resistance at 420, 430. There's not really much upside here on Ethereum. It's not nearly as clean as what I'm seeing here on Bitcoin or XRP. So I wouldn't really punt along here on Ethereum unless it's going to be close to invalidation where I can set a stop loss, reduce my potential losses if I do get stopped out and the idea gets invalidated. That's the only way that I'd play Ethereum at the moment. But Ethereum, same deal. 1, 2, 1, 2 in my opinion, after completed ABC correction that truncated. That is the bottom. That is the end of this video, guys. I hope you guys enjoyed it. That summed up pretty much everything I want to talk about. I had a major breakthrough yesterday. I was looking at this and I was like, hey, XRP looks completed. I'm seeing the same wave structures on Ethereum, same wave structure on Bitcoin. What if they just truncated? It's rare, but it happens. That's why there's a name for it, because it happens. So what if it just truncated? That actually made everything make sense all of a sudden, and it makes a lot of sense. Okay, so that's it for this update, guys. That's all I have. My official stance now is bullish. I expect that we see 14K before we see 9Ks again. That will all change if we lose 10.5K, but until 10.5K is lost, I am absolutely bullish right now, expecting continuation of the upside with no major dips. If you guys enjoyed this video, please like, share, and subscribe, and stay tuned for the next one. All right, thanks, guys.